Aviation has been a huge part of my life ever since I was a kid. I still remember with my brothers biking to the airport, standing behind the fence, my small hands and nose peeking through the fence, watching the plane get bigger, the lights getting bigger as they approached the end of the runway and taking off at the last second. And so 7 years ago, I finally made this dream come true. I became a pilot myself. I earned my commercial license and became a flight instructor. And I spent a lot of time flying between Hawaiian Islands and teaching other people how to fly. So today, given the unprecedented destruction of the airlines industry because of the coronavirus, I want to talk about what we can expect in the second half of the year, what we can expect from the airline stocks and how they potentially might recover and kind of discuss various investment opportunities in the industry. And so because this is an industry that's so close to my heart, let's do this for real. Welcome back to the channel. My name is Martin Zeman, and today I'm not going to be the former investment banker, trader, and a hedge fund manager talking about capital markets. Today I'm just going to be a pilot talking about airlines and about what we can expect from the airline stocks as we roll into the second half of this year and into 2021. So here in mid-July, when you look at the stock market, you could argue that there's a lot of sectors that mostly recovered their lost ground. In fact, if you look at the tech sector recovered all of the ground and then gained some. But if you look at the airlines industry, on the other hand, you still see a lot of value, and most of the stocks are still extremely depressed. And it's not a surprise that they are depressed given what's happening with the coronavirus in the United States. But there's still a lot of value. So in the next 10 minutes, we'll go over a bunch of different charts and numbers that will kind of shed some light on why I think that there's a lot of value on a 6 months, 1 year, potentially 2 year horizon, and why some of these stocks could in fact double, especially if there's an effective treatment and a vaccine found in the next 6 to 12 months. Looking at what happened year to date in terms of returns, let's look at this chart here that shows that at the top, the S&P 500 basically recovered all of the ground. Then you have the transportation index, WTI and Brent is still 30% down. And then we get in the airline names. So you see we have Allegiant, Southwest, JetBlue, and Alaska losing somewhere around 40-45%. Then we get to SkyWest. SkyWest is a great regional carrier that lost half of its value, but there's a lot of value to be found in this airline that not many people focus on. And then we get to a bunch of airlines, the big carriers that have a lot of international exposure, and it's no surprise that they are the ones that lost most of the value. So you have the Hawaiian, 54% down, Delta, 54% down, Spirit, obviously a lot of exposure to the New York, Florida route, and then American Airlines and United. If you look at kind of the unprecedented destruction in demand, it's really what we see in the headlines as well. So a few of the headlines that kind of flashed through terminals in the last few days, you have, Southwest CEO says passenger traffic needs to triple to avoid layoffs. Citibank says airlines may struggle to be profitable post-pandemic, but sees green shoots on the horizon. American Airlines to warn staff this week about potential furloughs. And United Pilots Union reached tentative agreements for early retirements and voluntary furloughs. So you see the demand destruction that we have seen in the industry is obvious. In fact, if you look at the numbers, in 2019, in the second quarter, so last year, the same quarter that just finished, the airlines industry in the United States made $6.6 billion overall. This year, in the second quarter, the forecast is for a $17 billion loss. In fact, Delta Airlines announced its results this morning, and among the highlights is a $5.7 billion net loss. And when we look in the future, they were planning to add 1,000 flights in August, only going to be adding another 500 flights. So it's highly variable. And the same thing is happening with United, which is a big hub in New York. And with the announcement of the quarantine by the tri-state area, United is also shelving a lot of the planned capacity that they forecasted bringing back online in August and September. This is a nice little table that the TSA publishes, and it shows the numbers of TSA travelers a year ago versus what we are seeing today on a daily basis. So every morning at 8 o'clock they publish this number for what happened in the previous day. And you see that at this point we are somewhere around 700,000 people passing through the TSA every day versus typically somewhere around 2.5 million last year. So that's still only 30% of what we have seen in the previous year. Now, if you think about what we can expect in the demand return and how fast these numbers could actually ramp up back to above 1 million and close to the 2 million, 2.5 million mark that we normally used to see. This chart here is showing what we have seen in the post 9/11 and post global financial crisis airline traffic. And so you see on the domestic line is the solid blue line at the top, and the international traffic is the dashed blue line at the bottom. And if you look at April 2001 and how long it took to recover, we are basically in April or August 2004. So that was 3 years to recover the traffic. Same for the international levels. And if you look at the global financial crisis in 2008 and 9, again, August 2008, getting back to that same level took until April, August 2011. So also 3 years here. And so we could probably expect to kind of have the same levels of traffic coming back in 2 to 3 years. And this is what you're hearing from the CEOs, unless there is an effective treatment and a vaccine. So I think it's clear at this point that we established the airlines industry really is facing an unprecedented crisis, probably much worse than what we have seen in the global financial crisis and post 9/11. But looking forward, looking ahead, what's important for investors is understanding that there are two areas they should really be focusing on when looking how much value there is still in the airline stocks. The first one is watching the recent trends in bookings, kind of looking at what do we have for August, how much capacity is each individual airline adding for the 2-3 months ahead. And that's going to be highly variable and highly volatile because airlines will be adding and pulling back depending on what the coronavirus is doing throughout the various states and various regions that they are more or less active in. And the second area is going to be the cash burn. So right now, every individual airline in the United States is burning cash, meaning they are spending more money to operate the airline that they are getting in. Delta, in today's results, announced that they burned on average $43 million per day, each individual day in the second quarter that just finished. They were getting more and more efficient throughout the quarter. And in June, they were only burning $27 million on average per day. So they're getting better at this. But at this point, it's highly unlikely that it's going to improve much more unless the traffic really picks up. Let's take the example of Allegiant. Allegiant is obviously focused on the domestic market as opposed to Delta or United that have a large international operations. But Allegiant is likely going to be the first US airline to return to positive cash flow. They have a highly variable cost structure and they are able to book a lot of the routes or offer a lot of the routes that they fly for booking. And then within 10 or 14 days of the actual flights, they look at what's profitable, what makes sense, and they cancel a lot of the flights that don't make any sense. So for example, in May, they were able to offer 77% of their capacity for flying. And eventually they got down the cash burn in June to only $500,000. So you're contrasting $500,000 of daily cash burn at Allegiant to $27 million per day at Delta. Obviously Delta, a much bigger airline at 15,000 pilots versus the 1,000 pilots at Allegiant. But that's a huge disparity in how much each airline is burning cash. And in a couple of minutes, we'll go in a very detailed chart that's going to show each number for each individual airline and what we can expect as they announce results later this quarter. Finally, the thing I want to talk about here is also how they are kind of managing the cash burn. Obviously, the two biggest items for each airline is the fuel costs, which traditionally has been the biggest variable in their cost structure, and the salaries that they pay their staff. So right now, when we're looking at most of the US airlines, they are forecasting that they will have to reduce staff by about 1/3 when the CARES Act expires at the end of September. So right now, because most of the US airlines took money from the US government, they are unable to furlough anybody before the end of September. But a lot of the airlines already negotiated packages or sent warning letters to a huge number of pilots and staff, flight attendants, etc., that they should be expecting a potential furlough at the end of September. A side note here, kind of to explain how airlines manage their staff and their pilots and flight attendants. It's interesting, unlike any other industry where your experience and your utility for the company kind of determines whether you stay or get furloughed or fired. With airlines, everything is based on seniority. So everything depends on the date that you are hired in, because that determines the pay, the routes that you can choose, the shifts that you can choose, etc. So when airlines today look at how many pilots they will have to furlough, or how many flight attendants they will have to furlough, they look at the date of hire. So for example, for Delta or United, they are going down several years in terms of how many pilots they recently hired. So typically it's a last in, first out kind of a principle. And what's interesting is that American Airlines announced a different strategy. In fact, here's a quote. American Airlines said they are committed to resetting the airline using a different playbook than the one of past crises, where last in, first out furloughs were the expected result. So it's going to be interesting how airlines will manage the staffing issues, because it's not about simply how many people you are able to pay early retirements to or how many people you furlough. The furloughs are expensive, especially if you consider how many pilots or how many flight attendants they will have to eventually bring back into the system. Because the way this works in the airlines is you get furloughed, and let's say a year or two later you get a call and the airlines tells you, hey, we need more pilots, you're on our seniority list, we're calling down the list, do you want to come back in? And when the pilots or flight attendants are coming back into the system, there's a huge cost because they have to be retrained, especially the pilots when they spend so much time in simulators. So again, the risk for the airlines when they look at how much cash they are burning and how many pilots they can leave on staff and active versus how many pilots they will be furloughing is a huge determinant of how much cash they will spend today to make this happen, to reduce the staff to levels they think they will need for the next 6 months, versus how many pilots they will eventually have to be bringing back online, especially if, let's say, a vaccine is widely available early next year and traffic picks up much faster than expected. So how much money is that going to cost them to bring the capacity back online versus competitors? So now a lot of the bad and ugly is out of the way. Let's focus on the good stuff. What is good about the airlines given the current depressed valuations? So let's go back to March and April when coronavirus really hit the United States. A lot of people, including the Boeing CEO, started talking about failures and bankruptcies in the airline industry. In fact, people looked towards American Airlines as a potential candidate for bankruptcy again. So that's no longer the case. All of the airlines in the US airline universe have enough cash to survive the next 1.5 years. And that's even including no improvements in the cash burn rate going forward. And in fact, we're getting into good stuff here. Let's look at this detailed chart that I kind of was keeping towards the end because there's a lot of numbers. We're not going to go over every single number in the chart, but I want to demonstrate here the liquidity situation of each individual airline, or the big ones at least, to kind of show that a lot of good stuff has happened over the last 3 months, given the CARES Act and given how much money the airlines actually raised, both in debt and equity markets. So looking at the top of this chart, it kind of shows the universe of the 11 airlines that I follow, that this report follows from Deutsche Bank. Michael Lindenberg from Deutsche Bank is one of the top analysts in the industry, and they published this report a couple of days ago. So at the top we have obviously the majors, Alaska, American, Delta, Hawaiian, and United. Then next to it we have the low-cost carriers, Allegiant, JetBlue, Southwest, and Spirit. And then the couple of regionals that are kind of bigger than the rest of the regionals in the United States, and that's Mesa and SkyWest. On the right, this is my little attempt at annotating the chart. So this is not a child writing on the chart. That was actually me. And that shows the number of pilots that each airline has. We could also go in the actual number of total employees, but the pilots really is the biggest cost in the whole overall expenditure for staff here. And what's important is kind of understanding the relative size of each of the big airlines as it relates to the other airlines they compete with. So American Airlines, 15,000 pilots, Delta, 14,500 pilots, United, 13.3 thousand, and Southwest at 10,000 pilots. So I know Southwest is in the low-cost carriers, but I put them on par with the three big main ones. simply because they have the size, despite being the low-cost carrier, they have the size to kind of be compared in that universe. All right, so let's look at this first bold line that is underlined here, the total liquidity as of March 31st. So when all of this happened, how much money did each airline have? And you'll see, American close to 7 billion, Delta 6 billion, United 7 billion, and Southwest 5 billion. And so you'll see in a couple of minutes how much this liquidity situation changed for each airline. Going down, we have all the June quarter liquidity events. We're not going to go in details here, but that obviously involves all the new loans and revolving credit lines and potential equity raises we have seen. So that's the detail of that. Then below we have the few installments in the CARES Act payments that the airlines received, again improving their cash position. And then we get to that bold line again here, total cash as of June 30th. And that's before the cash burn data. So simply how much cash they had at the end of March, how much money they received from the CARES Act, how much money they received from raising money in the markets, be it debt markets or equity markets, and now how much money they actually had at the end of June before taking account of the cash that they burned each day. So looking at American, we moved from 7 billion to 15 billion, which is obviously a huge number now. Delta moved from 6 billion to 18.7 billion in cash. Then we have United, they moved from 7 to 20, and Southwest improved from 5.5 billion to 14 billion. So you see that's a huge amount of money that the airline industry got on their balance sheet. Obviously the Fed helped a lot with the support that the Fed and the liquidity they provided the capital markets. That really helped in raising capital. In fact, looking at Boeing, which was at one point looking for federal help, they didn't need that because they also raised, I believe it was $25 billion in the capital in the debt markets. So now looking just below, you finally have the daily cash burn data that I was talking about throughout the video. So what's interesting is this is the average daily cash burn. So each day of the June quarter over the 3 months, American was burning $53 million each day. Delta 42. In fact, this is a forecast. Today Delta announced the results. It was actually 43. So Delta burned 43 million per day. So that's 10 million less than American Airlines, despite being of a similar size. So you see the efficiencies that Delta has versus American. Then looking at United, they burned 44, or we are forecasting 44 million as a daily cash burn. And then again, Southwest at 20. Southwest again, let's say Southwest is about 2/3 of the size that the three we just talked about are, but they again much more efficiency at Southwest at only 20 per day. And so below you have obviously the estimated average for the whole quarter, just multiplying the 90 or 91 days times the daily cash burn, and that gives you the total cash and market securities as of the end of the quarter. So you can see by these numbers here, at 10, 15, 16, and 12 billion for the four airlines we just talked about, they have a huge amount of liquidity. Going back to the Delta announcement today, when they announced that they were burning 27 million per day throughout the month of June. So assuming that would not improve, we can expect this will improve, but let's assume for a second that this does not improve into the second half of 2020. $27 million per day, that's assuming traffic doesn't pick up, they don't find any more efficiencies, and maybe they don't furlough other people, etc. They would be burning just shy of $5 billion in the second half of 2020. So looking at the liquidity that Delta has here, which is $15 billion, assuming no improvement, they would burn about 1/3 of that at the end of the year. So the solvency for most major airlines in the US, in fact for all of these airlines that are on this chart, is really not a problem anymore. So to sum up the few points we talked about when it comes to the outlook of the airline industry for the rest of 2020, I think there are a few names that really stand out in terms of valuations and in terms of the efficiencies that they are driving in their results and how they are positioned to take advantage of a rebound in traffic for the rest of the year and into 2021. I think overall it's safe to say that there's really no longer any risk of insolvency for really any of the airlines. But when we look specifically at a few names, I think Delta and the results that they announced today really show a very solid balance sheet. They show a lot of effort to drive efficiencies, and the cash burn reduction in the month of June to 27 million as opposed to the 43 million average in the second quarter is a big deal. And I think Delta will continue driving these efficiencies. Close to 20% of the Delta workforce already took some kind of a voluntary retirement package or option when it comes to the flight attendants and other staff. The pilots are still deciding, and I think their deadline is next Monday. But Delta really stands out among the big major carriers, I think, in terms of how much value they offer. The stock obviously is down a little bit today after the results. But anything in the low 20s, or if we did below 20, I think from a longer term horizon really makes sense. And Delta should recover extremely quickly, again, because how well they are positioned and how efficient the management is relative to somebody like American or United. Southwest is a great name, I think, because they are so well positioned domestically. Their cash burn in June is forecast to be only 20 million per day. Which is much lower than the big three that we compared Southwest to. And they are extremely well positioned to the recovery in the domestic travel. So once coronavirus is really a little bit more under control in the United States, the international traffic will take a lot longer to pick up again. And Southwest, being focused on the domestic travel in the United States, will really take advantage of the recovery. In the smaller caps, I think I want to highlight again Allegiant for the reasons we discussed. I think Alaska also is very well positioned, and SkyWest. SkyWest is a name that not many investors focus on so much because it's not a household name. SkyWest is a regional airline that operates a fleet of smaller jets, typically the planes that fit up to 76 passengers. And they work contracts for Delta, for United, for Alaska, and for American. So the four big carriers in the US, SkyWest flies for all of them. They have about 5,000 pilots. They have an amazing management. In fact, I spent 2 months in the SkyWest training program earlier this year, and I've seen firsthand how well positioned and how well managed the company is. They are obviously focused on the domestic market because they fly these smaller jets, the Delta Connection and the United Express, the non-hub planes that you get on when you're flying to a destination that's obviously not a major hub like Atlanta, New York, or LA or Dallas, are typically operated by these smaller jets. So where currently Delta or United only look at about 30% capacity of their planes flying, SkyWest is flying 60 up to 70% of capacity of what they used to fly last year this time around. So SkyWest again is going to be extremely well positioned to rebound because of when the domestic traffic picks up in the US again, they will take advantage of all these routes that normally they fly for the big carriers. Plus also another factor for SkyWest is right now the big airlines don't always fill up the big planes on the typical routes that they fly in the Airbuses 320 or 321 or the Boeings. So they have SkyWest flying these routes in the smaller jets. So that again is another factor for SkyWest, and SkyWest doing better than the typical airline that's focused on domestic and international and flies these wide-body jets. And finally, I think it's safe to say that airlines are really becoming very creative in terms of how they drive efficiencies. We have seen the mileage programs being used, for example, as a guarantee for raising capital. Now, if you're looking for a rebound that's a bit more aggressive and you really firmly believe that a vaccine is going to be available within 6 to 9 months, I think the two airlines that are positioned for a more aggressive recovery in traffic in the US would be United Airlines and Spirit. So I think that's it for the little chat today as a pilot about airlines. I really enjoyed this talk because this is, like I said, a sector that's extremely close to my heart. I fly planes as a hobby. I love talking about planes. I love talking about investing in aviation and following the airlines industry. So thanks for watching and listening, and I would like to know how you think about the airlines industry, how comfortable you're flying now, and what stocks you are invested in, or what stocks potentially you're thinking about investing in the airline space. Again, the airline industry being so depressed right now, I think there's a lot of value and a lot of opportunity. All right, thanks a lot. I'll see you next time.